For the next session, our honored speaker, Mr. Warren Chen, Head of Asia ex-Japan Research of Institutional Shareholder Service, will speak on the topic Stewardship and Responsible Investing, the proxy advisor's role in the ecosystem. Please give a big hand for Mr. Warren, please.
Good afternoon, everyone. First, I want to say a sincere thanks to SEC Thailand for putting on this wonderful event. It's my great pleasure to be here, and I look forward to spending the next 25 minutes with you. So today's presentation could be split into 3 parts. First part, I'm going to talk about the investment stewardship ecosystem and who are the players in the ecosystem and how does proxy advisors fit in to the whole scheme. The second part, I'm going to talk about ISS, company I work for, and how do we fit in there, how do we do what we do. And the third part, I'm going to talk about corporate governance trends in the world. I tend to move around a little bit, so. Okay. So, the ecosystem. So this is a typical view of a investment stewardship ecosystem. And this is a simplified version of it, and there are a lot of other elements in the ecosystem, such as stock exchanges, think tanks and academics, proxy solicitors, law firms, what have you. So, but for today's purpose, these I think are the key elements in the ecosystem. So let's go through each of these. First of all, we have shareholders. Here we're focusing on institutional shareholders, and one can kind of split the institutional shareholders category into 2 parts, right? Asset owners, asset managers. But in reality, that line is not as clearly drawn because majority of the financial assets are actually managed by asset owners. There certainly is a role, a critical role in the ecosystem for asset managers, but the reality is that asset owners are managed majority of the assets. But there are also other ways of looking at it, right? So if we look at the type of interest, long versus short, or the level of involvement, active versus passive. But for now, let's go back to the asset owners, the asset managers perspective. So asset owners obviously holds economic interest of financial assets, right? And some of the examples of asset owners, pension plans and endowment funds and insurance companies. These asset owners sets investment policies and objectives. And the investment policies could be asset allocation decisions, investment goals and constraints. And in the investment stewardship process, asset owners set their own proxy voting policies, and these policies include not just governance, but also environmental and social aspect of E and S and G, as many of the presenters have talked about before. And asset managers. Asset managers are fiduciary agents for the benefit of their clients, asset owners. And as fiduciaries, they must act in the best interest of their clients. And as a business entity, right, they need to tailor their products to meet their clients' needs. And in tailoring these products, they also need to set their investment policies. And at the same time, in the investment stewardship process, on the asset manager's perspective, they also set their proxy voting policies. So next, we have corporations, companies, right? So in the very basic theory of economics, right, these are profit maximizing entities, right? These entities are managed by professional managers who execute strategies and monitor performance. And the shareholders, elected board of directors, provide oversight for the benefit of the shareholders, right? And there are other functions within the corporation, such as compliance control, internal audit. Together, these functions together with the board of directors, they form a fundamental corporate governance infrastructure from within the corporation's perspective. And you know, in the recently, I guess, when I say recently, I mean in the last 5-10 years, corporations have also started to set up their internal corporate governance policies and guidelines. It could be perhaps because of the regulatory changes or shifting focus of the share owners, but these internal corporate governance guidelines could be talking about board independence levels, or having ethnic or gender diversity policies, or establishment of audit and nominating committees. But all these combined is also part of the investment stewardship process from within the company's perspective. Now, government. Government, through the legal system, right, these resolve disputes and establish standards. And regulatory enforcement agencies implement and monitor laws and regulations. And these agencies also investigate and prosecute offenders. The law-making system, the legislative system, makes laws, which governs the corporations and corporate behaviors. Government as a whole, right, has wide-reaching effect for the entire ecosystem, because through laws, regulations, through courts' opinions, where everybody in the ecosystem needs to obey and have wide-reaching effects. So now, so we come to proxy advisors. So we serve a unique and I think critical role in the whole ecosystem. At the very fundamental level, right, as a business, right, we provide goods and services to our clients. And in this case, our clients are institutional investors. And the goods and services that we provide are research and recommendations on how we think the proxy vote should be executed on specific issues. These research recommendations includes, again, not just governance, but also environmental and social aspect of ESG. And the research and recommendations are based on policy guidelines that are either region-specific or market-specific, or it could be client-specific, custom policies, which I'll touch a little bit later on. In addition to research and recommendations, we also provide data and analytics. Data analytics typically are used by our clients for in preparing them for engaging with issuers, right? Or that they use the analytics tools to kind of help them set internal proxy voting guidelines. And the last but not least piece of puzzle is a vote execution platform. This is a electronic platform which contains vote execution technologies, research delivery conduits, and communication tools for our clients, right? And the whole platform kind of forms an integrated platform for helping our clients to achieve their investment stewardship. So what drives our involvement in the ecosystem? If I could sum it up in just one bullet point, it's really our need or ability to change in dealing with the evolving investor needs, right? What does that mean? It means that proxy voting is increasingly driven by unique governance philosophies. It means each client is different, right? And each of our clients have different views and different philosophies on different corporate governance issues. And naturally, they look for partners that are able to help them kind of flesh out these unique governance philosophies and help them implement and execute their vote based on these custom policies. In fact, about 85% of all the votes executed by ISS are based on custom policies, not regular benchmark policies. And so the growth of global investment stewardship codes kind of prompts an increasing the need, the desire for engagement with the issuers. So in helping our clients with the engagement, we supply data, analytical tools to help them be better prepared. Also, quality, non-traditional extra financial data that are needed. It used to be, right, just during the proxy season, during voting times, where our clients need these extra financial data, but that's not longer the case. Now, it becomes a year-round need because environmental, ESG is now really figured into our clients' investment process. It's no longer just confined to the proxy voting side of the house. And also, lastly, the impact investing on the rise, which again generates additional need for service from proxy advisors. So we talk about the ecosystem. We talk about the players in the ecosystem and how we as a proxy advisor, fit into the system. So I'm going to talk about ISS. And the next few slides has heavy marketing flavor. So I'm obliged to show it. I won't dwell on it too long. I'll go through them quickly, but certainly if anyone has questions about ISS, I'd be more than happy to talk about it afterwards. So our mission is to empower investors and companies to effectively manage governance, environmental and social opportunities and risk to realize long-term value, right? In executing the mission, we provide comprehensive solutions in support of clients' needs, from the very core offering or core competency of governance research to, again, vote execution, to policy guidelines, which I talked about more often than not. It's a custom policy, to ESG rating, screening analytics, to data analytics, as I talked about. And in certain markets, we provide a service, the class action service, which is designed to maximize recoveries from class action litigation settlements. Again, that's market specific. There are markets which there's no class action lawsuits allowed. And in trying to set the industry standards, we rely on the depth of resources that we have, processes we have, the quality of the product we have, and also the breadth of coverage. Okay. Now, with that section over, let's shift gear a little bit and narrow the focus a little bit and talk about the group that I'm responsible for, Asia Ex-Japan Research. Before that, though, I want to give you some more specifics about ISS. So we're constantly evolving, so some of these numbers may not be point on, but I think it gives a good indication of what we do and how we do it. So for ISS, right, we have 17 offices worldwide. We cover about 115 markets, and we have about over 1,600 clients, and that's about 38,000 companies covered globally, and annually we execute about 8.5 million ballots. If we narrow, so that's the entire ISS. If we narrow the focus a little bit on the right-hand side. The Asia Ex-Japan Research Group covers 14 markets in the Asia-Pac region. And my research team sit in 2 offices, Singapore and Manila. I'm based in Singapore. And the teams in Singapore cover China, Hong Kong, Singapore, Taiwan, and South Korea. And the rest of the 14 markets are covered based out of teams in Manila. And within the 14 markets, we cover about 5,000 companies. And annually, we write about 15,000 meetings. So each of these 14 markets have different proxy seasons, right? And that's the time of the year where most annual general meeting happens. It's a busy time. So this just shows that basically our busiest time during the year occurs during March and June. And this is a cumulative chart. So Thailand falls into the Southeast Asia band, as the uppermost band, the kind of light bluish band. And for Thailand, we cover about 350 to 400 meetings a year, and about 60% of those meetings happens during the Thai proxy season, which is March and April. So now we come to the third section of my presentation. I'm going to kind of touch on some of the corporate governance trends in the region. All right? But before we go there, let's talk about where each of these regions have different corporate governance development stages. I mean, this is what I think this region is so interesting. Having a background of corporate governance in the U.S., I spent 14 years in the U.S. Doing corporate governance, and I just moved here not too long ago. And the fact that each of these 14 markets are at different stages of corporate development and have different views of corporate development is really fascinating. And why is that, right? In the U.S., things are fairly uniform, but there's a good set of reasons why each of these markets are different. And for example, right, for historical context, the ownership structures, are there markets where family-owned entities or state-owned entities are prevalent, and how does that affect the corporate governance structure, right? Regulatory developments, size of the market, and the level of the maturity of the market, all of these factors contribute to what the corporate governance picture looks like for any particular market. So this slide shows a couple of examples of what I was just talking about, right? So I hope you guys can read it, but so for left-hand side, it shows the average board independence level for various markets. And on the right-hand side, it shows percentage of public company listed boards that have independent chairs, okay? So let's take, on the left-hand side, let's take UK, for example. UK, 57% average board independence level for listed companies, right? In this market, there's a code that requires majority independence, right? Excluding the chair. So perhaps that's the reason we see 57, not too far from the regulation. If we shift to the lower part of the chart, just pick Hong Kong, for example, at 41%, that's a market where the code dictates 1/3 level independence for public listed companies, right? And again, perhaps that's the contributing factor why we are seeing 41 versus higher or lower number. That's not as interesting as the right-hand side. Right-hand side, again, shows percentage of publicly listed boards with independent chairs. Right? Let's stick with the UK, for example, right? I think UK, that's 64%. Right? But interestingly, compared to Hong Kong, at the very bottom, at 2%. only 2% of listed companies have independent chairs. Now, why is that? It could be many factors, one of which, right, there's regulations about overall board independence. There's no regulation about having an independent chair. But I think the more interesting factor it could be is that, Hong Kong and many other Asian markets are have prevalence of family-owned entities. Right? If you have many family-owned entities that are publicly listed, you're less likely to have an independent chairperson. So that just gives an example of varying practices, a varying point of view for corporate governance practices. Okay. So I'm going to talk about some of the trends we're seeing for a couple of markets in the Asia-Pacific region. Picked Hong Kong as one. Hong Kong is an interesting market in terms of one aspect of board of directors features we call overboarding. Right? Overboarding, from our definition, is that any director who sits on 6 or more public boards. Right? If you sit on more than 6 or 6 or more public boards, we believe that that one person most likely won't be able to spend enough time devoted to each one of the boards he or she sits on. And we believe that's an issue. So Hong Kong is a market where we see many issues with overboarding directors. But in the past 2 years or so, I think we're seeing a declining trend for overboarding, which is definitely a positive development. Second one, weighted voting rights regime. Mary had a whole presentation on it, so I won't dwell too much on it. But yes, this year Hong Kong Stock Exchange started allowing companies with dual class shares or weighted voting rights, companies to start trading on the exchange. Us and many of the institutional investors are staunch believers of the principle of one share, one vote. Right? This is development that's going away from that principle, which we don't believe is a positive development. And the last bullet point here for this slide, we expect to see enhanced transparency in nomination for companies in Hong Kong because starting from January 2019, companies are required to disclose additional information on the nomination process they use during the year. Any sort of development like this, which it gives investors additional insight into how corporate governance process works internally, from our perspective, is definitely a positive change because it really gives investors more information on understanding of the company. And my last slide, looking at Singapore. Singapore, it's from corporate governance perspective, most companies in Singapore are compliant with the best practice in terms of board composition, but we expect to see improvement on that even more because of revision in corporate governance codes. I think one of the notion, upcoming revision, is that the requirement for the board to be 50% independent if the chairperson is not independent. Again, I think that requirement is sensible because of non-independent chair. And again, dual class shares, as Mary mentioned earlier, Singapore is another market in this region that started allowing companies with dual class shares to trade it. Again, we don't think that's a positive development, but we'll have to wait and see if other markets follow the leads. We certainly hope not. So with that, I want to thank you for your attention. And again, it's been my pleasure.